Okay, good evening, everyone, and welcome to tonight's session. And as usual, we will be talking about, uh, you know, the market business model, right? As we've been talking about, I wouldn't. The last class we had was able to expose you to a new understanding and a proper way to view or to see inversion. And we're talking about inversion and everything, what makes up an inversion, and other things that you need to know or to see as a trader, right? So I think we're done. We're done with our lectures, and this class would focus on helping you to properly understand an inversion. Then classes after this would be classes that would introduce it on how to properly use inversions and everything that I've been taught so far in the academy. I'll also be dropping um, videos on how I was able to catch some of my trades so that you can learn from it, right? But like I said, the, it is beyond the whole trading of a thing. Sorry, analysis, right? Analysis is one thing, trading is another thing. If you know how to analyze, but you don't know how to trade with what you have analyzed, you can keep on hopping from concept to concept and you'll never find the one that works for you, right? And the reason is because of um, trading is actually what's it called now? Trading is actually a game that is played by both your understanding of what price should do and then how you now engage what you anticipate price to do. So it's more than just knowing or what market wants to do, what the price wants to do. It's also knowing how to engage it, because at the end of the day, what is the benefit of having all the knowledge but you don't know, you're not making money with it, you don't know how to make money with it, right? So um now I'm going to launch a trading uncharted. For those of you on my Twitter, you would have seen me talk about trading uncharted, right? And I recently hosted a space for it on the community group, right, where I was explaining what you will learn and every other thing. So if you're interested in cutting the journey short, the whole, now you're gonna be profitable wherever you are learning here, 100%, right? But I'm not there to guide you. I'm not there to correct you. I mean, when you finish watching this video, you go into your chart, you're practicing what you will learn, what you have learned so far, and you see these things working day in, day out. But the point is, you should have the ability to be able to make money with it. And if you're unable to do that, then what is the purpose? What's the benefit, right? The best you can do is just hop onto another strategy, right? But it's not actually the concept that is the fault. It is you that don't know how to trade with it, okay? So you should also know how to trade. Knowing how to trade is very, very important as understanding how to analyze, okay? So for those of you who would love to join the Trading Uncharted, it's there on my Twitter and it's also there on my Instagram, and you can join, right? Now, let's get down to business. So, like I was saying, today's class will not be too much. It will not be too much elaboration, because basically we have covered a whole lot on inversion in our last class. So this class would just help you to filter through inversion and properly understand it. Okay. So let's get down to business. Now you see, I was telling you in our previous class that inversion is made up of three things, right? Origin, prime, and climax. And since that class was an introduction to the inversion concept, it might be a little bit too much of information for some of you, right? So we're going to take it one step at a time. Okay, so I'm going to build up an understanding for you. We're going to go to the chart and we're going to see this thing play out in real sense, right? And remember that the most important use or the key use of inversion is for continuation, right? So basically, because the truth is, price would sometime come to, let's imagine this is your previous day high, yeah, this is your previous day high here, and this is the previous day, and this is the previous day low, right? So price would sometimes come to the previous day high, and then give the volume transfer, and it will just get transferred a little bit, right? And this, as it's getting transferred, right, it's not hinting at a total reversal. What it is hinting at is just a pullback, right? But most people will now see this as a reversal. But if you have inversions that are waiting for you, right, when there are inversions at this region below the whole clearing, you can now know that, okay, this one here will not hold. What price is just doing is retracing into that inversion to continue moving. Right now, in cases where there are no inversions, now we can have um, understanding, strong belief that, okay, this is going to hold. And in some cases, there might even be inversion, but it's not a complete inversion and all. And then we know that this is going to hold, right? So basically, that is the idea behind how we trade. We try to piece everything that have been taught so far in the lectures, and I will try to help you use them to become a profitable trader, right? So remember, we don't trade patterns; we trade the logic, the reasoning behind price, right? So sometimes inversion will form, it will not hold. Sometimes the whole um, you know reversal model will form, it will not hold. And reason is because of, you have to understand price, right? You must be able to follow that narration. What is price telling you, right? Price would definitely tell you if a level is going to hold or not. It is your job to listen to what price is saying and make money from it. Okay. So now I've taught you guys that inversion is basically moves. Okay, inversion is not just one candle or two candles. It is a move. So in an inversion, we might see a sell side, then bullish side, then bearish side, right? And basically, many times we would see stuff like this, right? And it will be confusing, and we will start calling them names, right? Lower high, lower low, higher higher low, based on what you have learned in market structure, right? I'm sorry my voice is low, guys. I'm not feeling too good. I'm under the weather, but I just had to make this video, right? Because it's long overdue. So basically, the chart presents itself to you in this manner, right? And your goal as a trader is simple, right? Understand how you can buy from this zone, buy from this zone, this low here, buy from this low here, and then when price gets here, you know that you're not supposed to be buying again. You should be selling, right? So you start selling from this high, from this high, from this high. Similarly, your job is to know that you should sell at this high, sell at this high, sell at this high, sell at this high, and then you switch, start buying low, buying low, buying low. The point is, you should have the ability to know these things, understand them, see them in hindsight before they happen, and take trading decision of them. Right? That's basically what you want to do. As a trader, that is your strength. That's what you're looking for. And this is what the market business model is here to help you understand, right? So when you see um, based when you see price move lower and then goes high. And now you see that this move here took out wherever high is here, right? Wherever level is there. See that high there? This high here. Remember swing high, swing low, swing high. So we're dealing with swings here. You see this swing high here becomes your prime. Um 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 it was your climax, but price already took it out. So it becomes your prime. This low here becomes the origin, and then this high now becomes climax. Now, I told us that there are rules that binds how we trade inversions. And these rules are how we now know how to follow inversions and trade them, right? Now, you see this level that was prime, that is prime, becomes an entry point. This level that is origin becomes your stop loss level. This is the place where we say, okay, we are done with the trade. And in some scenario, we wouldn't consider it as stop loss level. And I'm going to explain those things to you, right? Right. And then this high becomes your take profit zone. So we're looking at something like a prime, origin, climax, and then price coming back into prime, yeah, and then going to take out what? Climax. Okay. So basically, this is just a textbook explanation. So we're looking at something like price doing something like this, and then going to take out climax. Now it has taken out climax. This climax region, hold on, let me make it this way. So this climax, previous climax now become a subprime. Okay, it becomes a subprime. This level is now the origin. This becomes the climax. And what do we anticipate price to do? We anticipate that price would come where? Into the 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 subprime and continue moving from there. Now, in some scenarios, we will now see price give us volume being transferred and start selling. And in some scenarios, price would give us this same volume being transferred and it will not sell. And reason is because you add context to price. If you do not add context to price, you're gonna fail. If price should clear climax and it is not at expensive price point, then then we don't have any business with selling. But if price should clear climax and it has expensive price point, then we know that we shouldn't be looking for bullish moves again. I hope you guys are getting it now. Now, origin are levels that are protected, not price points. Now, the reason why I do not call origin price point in MBM is because sometimes price would come out to below that origin and take you out, then go your way. And what happens is because you see different data providers like FXCM, Wanda, and Co. They only give you information based on what they have, and it might be different from what the market actually is showing, what is really happening in the market. So when they show this level as they are low, on let's say Wanda is showing $2 as the origin, and then you can switch to FXM and you'll be seeing it at $1. So each service provider differ. So that's why I do not put origin as a price point, but as a zone. You understand? Okay, so in fact, all of them, both prime, origin, and climax, are all zone based, not price based. Okay, because we are trading based on understanding of orders, right? Orders flows. So we are trading at order points, areas where there are large orders. Now, in the market business model, your your let me delete this now so that I can focus more on what I'm teaching. In the market business model, right? Your your hold on guys. The origin is usually an area low of high liquidity but low volume. The prime is usually an area of high volume, right? And the climax of high volume and high volatility, right? Then your climax is also an area of high liquidity because price would usually come from an area of liquidity to liquidity. So price always goes from orders to orders, right? I've explained how this thing works, how orders, liquidity, volume, and volatility work. So when you see prime, prime are areas that market profile people call point of control. So you want to see most times when market comes to prime, it just wants to live there. Doesn't want to waste time there, just wants to live, right? So because of there is much volume around that area. Okay, so that's point of control. That's where a lot of people are, dealing so much volume to that direction. Now, one of the issues you will have as a trader is the issue of direction, and this is what inversion is helping you to understand. So now you know that once price comes to a bullish sun prime, right, it's going to clear that bullish climax. And that's it. Now, for a sell side scenario, it is still the same thing, right? We see price open, see price create something like this, right? And one thing we know is that this becomes our, our entry, and then we anticipate price coming there, and then selling, and then coming there, and then selling. Now, here's the thing. Sometimes price will go high to clear you out. And now this is how the whole trend line is being formed. That's why if you follow the inversion theory, you understand how trend line are formed. Now, when price clears this level, it doesn't mean that price is selling. And this is usually what trend line will call fake out, right? It's not a fake out, right? It's not a fake out. It's just price being priced. And now, how do we know if this level will not hold or if it will hold? Because the truth is, you need to understand all of these things, right? So you will be taught. You'll be taught if your origin is at, let's say, the origin is at expensive price point. Let's say you're selling now, so your origin for you to sell, your origin needs to be at expensive price point, right? The origin would hold if it has expensive price point. But if the origin is at cheap price point, created at cheap price point, right, then chances are high that there will be a takeout before continuation. You need to understand. What I'm trying to say is I've teach you guys what is cheap and what is expensive price point. Right? Cheap price point is anywhere below the open, below the previous candle low, right? Below the swing low. And expensive is the opposite of that. Above the open, above the previous candle, and above previous candle high and low. So these are the rules that bind inversions. Now there are other rules, but I wouldn't want to burden you with so much information. This is enough. Then you start trading. So let's go to the chart and let's see these things play out in real life example and how we would have been able to trade. Now I'm going to also teach you how to refine because if you look at something like this, see this move here, right? This prime origin climax. And if we measure, we cannot say we want to enter at this price point, right? Reason is because I mean this is just one to we might not be able to make much of this move. So this is where refinement now comes into play as an MBM trader. And I'm going to teach you how to refine because now when you learn how to refine, you can be able to now take trades that is very with lesser risk, like 1 pip, 2 pips, and you make your money, you get, and then you know price is going to the climb. So let's first go to the chart. I'll show you this inversions plays out based on what I just taught you now, and how you as a trader could. Then we'll come back to talk about what's it called now, refinement. So I'm just going to use a very simple example. This is AUD USD, and this is AUD USD on the. Let me go to the 4-hour time frame so that we can be able to relate properly. Or let me go to the 1 hour, because okay, so this is the 1 hour time frame on AUD USD, right? As you can see, it doesn't matter if price is consolidating or if price is trending, but the point is, when we see a high, see this high, that is this high, that is um climax, right? Then this low becomes origin, then price break that climax, making that climax to now be prime, and then created a new climax. Now that it has created a new climax, what happened? It came down into her prime, right? And from there on, it went to clear. Where do we expect price to now go? Definitely this high. So from here, we know that price will do what? Go and clear that high. Now, that high there. Now, immediately price cleared that high, which is the climax. You can see how it created a weak candle. So I created a weak candle, right? Telling you that, okay, there are remember I told you at climax there are lots of liquidity. Okay, so definitely for price to be selling means there were so much um, orders resting at that point, and then askers were able to take that volume. So volume get transferred to askers, and as you can see, because of volume got transferred to askers did not mean that price started changing direction. No. Yes, there was a sell move, but it was not a a big kind of sell move. Instead, it was just a little bit of pullback, as you can see that pullback there. So this is where majority of you guys usually fail in trading. You would think, oh, it's reversing. Meanwhile, you just want to pull back a little bit. So with inversion, you can be able to understand that. So that's a pullback there. And that pullback is already below where? It's below the climax. That means, it's below the climax, and even below the prime, right? And that's the reason why you now see what follows an impulsive move. That impulsive move was to clear this climax. And then the next thing is price selling from that point, dropping, 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 but this is still a pullback. Now look at what I explained to you guys now. I said in some cases price would clear the origin, but it doesn't mean that price is reversing, because clearing that origin is actually at the zone, at premium or expensive zone, right? And in MBM we call those we call those things what's it called now? Well, we're going to talk about it. Let's take it one after the other. I don't want to, because it will require that we explain it again. So let's just focus on what we are here to do. So you see price come down, take out that low, and origin, right? The origin still works, right? But the point is, based on what I just explained to you, this could happen. And where do we think it's going? To that high. And you see that price. So there are so many scenarios, but let me go to a little bit challenging one. And let's use something like this. So now you see price creates a high, right? A climb, that's a prime, an origin, then a high, right? And then you now see something like this little pullback, right? Which you might think, okay, this is now sometimes you would assume that this is the proper one, which you are not wrong. Right? You want to take this one as your origin. I'm sorry, origin, prime, and climax, not this one, right? Which you're not wrong. But like I said, in MBM we trade reasoning. So whatever happened here, I'm very sure it's above the daily open, above, in fact, above previous daily levels. Yeah, you can see. So this is previous day high here. You can see this is above the daily open already. This is above the daily open already, above the daily and even clear previous day high. And I'm sure it will even be above the weekly level. So it makes sense that, and I'm very sure around here, if I go to the 5 minute or lower time frame, I would see price creating maybe a VT, a VTA. That's the reason why you see this kind of move clearing that level there. But regardless, price to continue in that narration. Now, it's okay for you not to, for you to pick this region. You can never be right all the time. But when you follow price narration, even if you are unable to be part of this move, at least you're able to get to this move for the day and you are okay. And since you now understand that, okay, price is still in a continuation move, you can then look for your entry around this level here, and then you are now in the buy. So you can see how we were able to frame daily bias without even considering if whatever day it is. We're able to sell here and we're able to continue our bullish move here and we'll continue our bullish move here until price gives us reason to stop that bullish move. So basically, that is how we trade inversions. Now let's go to how do you now refine inversions so that instead of you to just enter trades, because if we look at it here based on what I just showed to you guys, um, if you enter trade, any trade, maybe you enter a trade here at this prime. I mean, your stop loss is large. I mean, this is like 60 something pips stop loss. That's too much. But is there a way that you can refine such a way that at the end of the day, your stop loss is just, let's say, less, maybe 2 pips, 5 pips, or lesser than 10 pips? Personally, I don't take trades that are, you know, that are anywhere above 10 pips. 10 pips is my buffer. Now, when we refine MBM, this is where we now use the multiple time frame analysis. But the way we use the multiple time frame analysis um is not, we focus on price itself. Now, while inversions are based on zone, refining inversions are based on price. Now, don't get, so always remember that when you are refining. For some of you now, you go and refine, and you over refine or you under refine. Now, let's explain that, right. And I'm not feeling too good, but let's proceed regardless. So what I'm saying in essence is that, guys, you hold on, okay. And what I'm saying in essence is that when we refine as traders in MBM, we know the market is not just going to be a straight line that is just going to start selling like this. It's not going to be straight line like this. No, it's not going to be like this. What you will most probably see are stuff like this. In a bullish move, let's use a bullish inversion, for example. You see stuff like this, right? And then, hold on. In a bullish inversion, you will see stuff like this, right? Not this. See stuff like this, right? See stuff like this. And yeah. Now, you see this levels here, right, that I've just shown to you guys. These are primarily what you would see in a bullish move, in a bullish inversion. So for us to refine, naturally, traditionally, right, this is our prime where we anticipate price to come into so that we can buy up right to the climax. But because of from here, this high, from that prime to climax, the loss might be much based on pips. So what we now do is we now reduce our we now find a way to now negotiate price, and this is where we do the whole negotiating of it. And so we always look for the highest or lowest price point for our entry. When you are buying in an inversion, you are looking for the lowest price point, and when you are selling in an inversion, when you are in a sell inversion like this one, you're looking for the highest price point. So inside this inversion, from this level, from this prime to this climax, do we have a low, right? And if the answer is yes, then our low is our refinement. Now, when I say low, I'm talking about swing low, right? So you can pick anywhere from that swing low to the high of that swing low as your entry. That way, you are able to now enter a trade. Like let's say you're entering a trade with minimal pips and maximum take profit. So by the time price is coming down and it touch into it, it goes back up, and you rinse and repeat the same thing. Where is the lowest point? This is the lowest price point, and there. Now, in some cases, price will not give you swings, but it will give you candles, right? So you are picking the last three bearish candle, any of the last three bearish candles, right? In this move, in the buy side inversion, because that is enough for a swing to have formed. We might not be able to see that swing on the time frame we choose, but we are sure that if we go to that time, that candle on lower time frame, we'll be able to see swing formation. So we now use candles as reference. Okay, I hope what I've just explained to you guys here makes sense and you are understanding it. Now let's go to the chart to explain this so that we can see examples of refinement. Now I'm just gonna have to delete all these things that I've drawn on the screen. Now, in a scenario like this one, as we can see, okay, sorry, price is just let me use recent price. So in scenarios like this one, I will have to go to lower time frame so I can see. Now, always use higher time frame for your inversions. Very important. Let's use 4 hour for this. Our lecture will use 4 hour. Now, personally, I use 8 hour for my inversion to pick my inversions. Right. So now, if we look at this whole thing that happened here, so we can see price create this high, this low, then prime, climax, and origin, right? Swing high, swing low, swing high. Now, we know already that price will come back to this high. So before this whole move happened, we know that price will come to this high, right? So, and we know that this region is our entry. But we cannot enter at this price point, because if we enter at that price point, right, so where we want to put our stop loss, we are risking 37 pips, right? And that doesn't make sense. So what we do now is we now, you see, remember I told you the last, uh, three bullish candle, right? So in a buy side, we're looking at the last three bearish candle rather, not bullish. So, and if we look at this is the last two bearish candles. So I'm just going to draw something on that. Now I want to refine this further. I can go to lower time frame, like let's say 1 hour. Let me see what the 1 hour has to give me. And then on the 1 hour, where's the last? So I'm just going to pick the last bearish candle, and this is what I'm seeing here. But I'm not satisfied. Now, if based on this refinement, naturally I will lose 37 pips, but now I've been able to refine it to risking how much? Just 18 pips. But then I'm still not satisfied. I want more lower pips. So I can go to 15 minutes and look for the same thing. Yeah, that price point. I think I even went a little bit too far on that price point, right? And now I'm looking for the what? The last three bearish candle like this one. And yeah, you can start from the high of that last three pick, and you can pick the second, you can pick the third. It's your choice. For some of you, you are very okay with picking this last candle because of you want to risk little, right? But now the risk there is that price sometimes will just touch this second candle and go up. Sometimes it will touch this third candle and go up. Right. So, but then for some of you, you are not cool with missing those kind of trades. So you can pick this third one or the second one, right? So, but the point is that eventually, whatever style you choose, always be consistent with it. Don't switch. Because when you switch, you will not be able to maintain consistency, and it is the consistency that gives you profit in this market. So I will pick this fifth one, and I want to go lower. Now, how much am I risking here? Let me see. This is just 8 pips. Now, from 37 pips to 8 pips, but I want to go lower. So let me go to 5 minutes. And after this 5 minutes, I think I'm done. I just want to use this as example for you guys so that you can see how this thing works. And this is it there. Good. Now I'm going to pick the last three candles. Three bearish. This is a bullish inversion. So I'm looking for the last three bearish candles. And this is it here. I'm just gonna pick the last this one. Now I could have picked this one, but I'm on the lower time frame, so price might not eventually. I mean, that is over refinement for me. As far as I am concerned, that is over refinement. Yes, I'll be risking a little bit, but I still don't want to over refine in such a way that I now miss this trade, right? So what I will now do is I'll just pick that level there, and I hope that then I will just relax and wait for price to touch it. And as you can see, when price came to that region, right, what happened? Touched into my trade. And now, um, if I'm gonna place a trade, I'm going to place a trade. I'm going to let's look at how many hour that is from this level to our high. Remember, the climax here is where we are anticipating price to come to, right? So let's see that. That's how many RR? That's 1 to 10. So it means that if you're entering here, you have the potential to make 1:10 as profit. Now let's now look at how this whole inversion was able to help us now build understanding for price. Now look at it here. This high here was previous day low. That climax was previous day high. So basically, price came to where? Now, we did not pay attention to previous day level, but because of inversion, based on the law of inversion that I told you, right, that inversions will hold as long as it is at cheap. In a buy inversion will hold as long as it's at cheap price point, and a bearish inversion will hold as long as it's at expensive price point. Now, this is the daily open here. As you can see, price came below the daily open, right? And then came into the inversion. The inversion itself is already at the low of the day. So it's basically price already telling you where it wants to go. And this is the precision with MBM. Price basically tell you this is where I'm coming to and this is where I'm going for today. So for this day here, we're able to understand price delivery without much stress, without much drama, just by understanding inversion. And we're able, in a single day, we're able to make 1 to 10. I mean, if you can make 10% of your account in a day, that's good business, bro. That's good business. And price took you out there and you made your money and you continue to look for that same thing that you we have been looking for, right? Now, so in some scenarios, right, we now have to look at some other scenarios whereby these inversions, where you see price comes a little bit lower than the inversion and all. Now, in those kind of scenarios, it doesn't mean that price is wrong. It doesn't mean that, oh, you are wrong. It's just that based on what I've explained, sometimes it happens like that, that we pick the wrong entry because as traders, the kind of resources we have is limited. But knowing that price took, let's say for example now, let's look at this level here. Let's look for the next inversion. Okay, let's just assume that let me just use this one. Now you can see how price took this low out, and this is supposed to be an inversion, right? But then that taking of that low out was actually previous day low being taken out, right? And after that previous day low being taken out, right, it could hint us at price going up, but it happened outside of session. So we know that, okay, we just have to relax. Now, the next day price opened above the daily open, and I'm very sure it will give us an inversion here. That's why it sold. So we personally, yes, in some cases, even I myself will take losses in some cases. But the point is that overall, you're able to maintain profit with understanding. I'm not here to teach you tell you that MBM is one, what's it called? I'm not here to tell you that you as the trader is going to be 100% right. But the truth is that MBM actually predicted this whole sell from this high. And I'm sure that reason why, in fact, this whole move here, what they good. Now, this is Wednesday. As you can see here, it's Wednesday. So since today is Wednesday, this is Monday, this is Tuesday. Remember the weekly profile that I taught you guys, right? Based on the weekly profile. And that is the reason why this inversion here did not hold and it got broken, right? So when you are analyzing, don't just look for, I'm just showing you the flaws now that you as a trader can come out. You can actually pick up a system that is 100% profitable and flaw it because of a lack of understanding. So don't do that, right? So, dear traders, I hope this little class have been able to help you understand inversion and see it for what it truly is. And I hope that you'll be able to use it to make money for yourself. And in our next class, let's see if I'll be able to talk a little bit more about inversions and how to add everything together and give you more examples. But for now, and like I said, I'm honestly under the weather. I don't know what's wrong with me, right? Not feeling too well. So I'll see you in the next class. Do have a wonderful night rest.